All right, welcome to Talkin Investing. Thanks everybody for joining us. Today we have a very special guest. We have the CEO, Fred Thiel of Marathon. So we're going to go through, ask him a bunch of questions. I know that you guys have been asking me tons of questions. They have an awful lot going on. So I'm just going to kick it over to Fred for a minute. I'm sure you all know who he is, but I'm going to allow him to just introduce himself and give a quick background, and then we'll get into some of the questions that I think everybody is looking to have answered.
Great. Well, it's great to be here. Fred Thiel, Chairman and CEO of Marathon Digital Holdings, large publicly traded miner, and very excited about what's going on in the mining space today. Obviously, we've grown our capacity immensely over the past year. Now at a little over 23 exahash of installed capacity, and as we announced today, we're going to continue to grow both domestically and internationally by adding another 5 exahash in the near future, and looking forward to more growth beyond that.
All right, fantastic. So that leads right into, fortunately for me, you guys put out your monthly operational report today. So we got a bunch of new information. So I think probably everybody's pretty excited about that. There was some exciting stuff, some big stuff, some stuff I did not expect in there. So definitely a lot of questions to go through. So I guess I'll just start out with what I thought was the biggest piece of the puzzle, kind of an announcement. I'll say an announcement and see, if I can drag any more details out of you, but obviously you can only say what you can say. You talked about adding 5 exahash. I think the words that you guys used was you added 5 exahash, the capacity for 5 additional exahash in the ordinary course of business. So is there anything more that you can tell us about that, or is that for the future?
It's more for the future. Essentially, what we've done is contracted to buy miners in what we call the ordinary course of business that would increase our capacity by a further 5 exahash beyond what we have currently today. So if you look at the capacity we have in the US, which is about a little over 23 exahash, plus the capacity we'll have in UAE when that's fully online at the end of this year. It's another 2 exahash that will be attributed to us, if you would. That'll be 25 exahash plus an additional 5. So when these miners that we've procured are installed, that'll be 30 exahash. And, we'll continue to announce further growth goals, as they happen.
Okay, well, that is exciting. So you guys have done some growth. I'll call it quietly because I don't think people are as focused in on it. You do have this joint venture going in the UAE, and like you mentioned, I think your portion of that, I think, is you're 20% in that joint venture, and that's going to add 2 exahash. Is that correct to your?
Yeah, a little less than 2 exahash. So it'll be 1.7 something exahash, and then depending on overclock and things like that. That site is fully immersion, and so it operates. It can overclock because of that. So I think when you look at the net contribution to us, it'll be somewhere about 2 exahash.
Okay, is that something that you guys? I've heard you talk about wanting to diversify geographically. So I know, you're a large portion of your business in the United States, a large portion is in Texas. And I think, that seems to be going well, but you've talked about diversification. Obviously, this is the first big step towards that. Is this kind of a test run? Do you expect more in that location, continued expansion there, or are there other places you're looking to go?
Great question. So, and I spoke about this on our earnings call. We're looking longer term to be about 50% domestic, 50% international capacity. And our goal is to not have more than 20 or 25% of our capacity in any one region of a country or part of the world. The goal being that you obviously want to have and operate in different climate zones so you can deal with heat and temperature differently. Different curtailment criteria for different grids, et cetera. Today we have a lot of our capacity in Texas. We brought on North Dakota more recently, so we're starting to diversify beyond the Texas capacity with UAE. We're now diversifying internationally, and we'll continue to grow both domestically and internationally, but longer term, we want to be about 50-50. And again, no more than kind of 20-ish% in any particular region of the US or part of the world.
Okay, so without knowing time frame, if I impute from what you've said, you guys do have an awful lot more growth planned. Like I said, as to when that is, I'm not sure, but just doing the math on what you just said to get to 50-50, internationally versus the U.S. and so you right now, I believe with what you've got online, I think you are already the largest by Exahash publicly traded Bitcoin miner at. So if I read correctly, you're at 23.1, which has been your stated objective for quite some time. You're there now, or it may have said imminent. So you're essentially at that point. You just laid out a map to 30. So if things go well, can we expect more to follow?
Well, I think two things. One is we obviously want to maintain our share of the global hash rate. So as global hash rate continues to grow, you should expect us to continue to grow minimally pro rata with the as global hash rate is growing. And then depending on market conditions, we believe in being obviously very agile and moving very quickly when it makes sense. And so we spent a lot of time and effort developing our technology stack, from the pool all the way down to the ASICs. Our investment in Authorize is, now general public knowledge, so people are aware of that. And that gives us the ability to have really fine-tune everything we do. And so we wouldn't have made that investment if we were just going to install on what we have today and sit back and twiddle our thumbs, obviously. So
right.
We intend to continue to grow. Our focus is on delivering shareholder value and creating value for our shareholders. And we think that securing the Bitcoin blockchain is a very important part of that mission. So you should expect to see us to continue to grow, again, as market conditions allow. If the current market conditions continue, I think there'll be some miners that will continue to grow, and others won't be able to afford to grow. The machines are generally readily available today. Hosting sites are generally ready available if you have capital to build them out. The challenge for most miners today is lack of capital, and that's not something we suffer from.
No, so I'm going to pivot just a little bit because just to expand on that point, you guys have an extremely strong, I'll say it, you guys have a very strong balance sheet, maybe, the strongest in the business, if not one of the strongest. In this latest announcement, you talked about $111 million in cash, so you've been consistently over $100 million in cash. You have the largest stack of Bitcoin out of any publicly traded Bitcoin miner, over 13,000, I think. So, those two things put together is the better part of $500 million of liquidity, if you will. And I know you're probably not looking to eat into your HODL position, but it does provide a lot of liquidity. So is that, what can you talk about your balance sheet just a minute beyond what I've talked about and how that plays into your long-term strategy?
Sure. So, the only debt we carry as a company is the convertible bond that we have, which is $746 million that's due December of 2026. It has a 1% interest rate. There's no amortization on it. So obviously we want to make sure we're in a position to be able to deal with that from both cash and Bitcoin on the balance sheet, when that comes due. There may be opportunities to do other things with that along the way, but we'll have to see. Additionally, we want to make sure that we have enough cash and liquidity so that if all of a sudden an opportunity arises for us to acquire a company, acquire sites, acquire the right types of miners, we have the ability to do that without necessarily having to be dependent on access to the capital markets or the ability to raise debt. So we believe that luck is kind of defined as opportunity meets preparation. We always want to be prepared to do things. And so the key for us is really to constantly weigh kind of where do we think the near-term, midterm, and long-term trends are pointing in this industry so that we make the right choices and right investments, and we're positioned properly for whether it's a more extended period of this sideways choppiness in Bitcoin, which we personally view as something beneficial to us because A, we're not servicing a lot of debt. We have ample capital to continue to acquire other miners, either mining companies or rigs, and the ability to build out sites where others might not have that capability. So we believe that the current environment really is, is beneficial to miners with strong balance sheets like ourselves. We're very excited about kind of opportunities over the next 12 to 18 months.
So any thoughts? You mentioned you want to at least keep up with the global hash rate. I know, there's a lot of word on the street, if you will, that a lot of machines across the industry are going to have to be retired at the halving. Some people expect a pullback in the global hash rate. I'll just give you my personal opinion, not that that matters for anything. I'm not necessarily expecting that. I'm wondering if you guys have any expectations, or you're just in a wait and see, be flexible and just, play it by ear.
Well, if you think about our fleet, the majority of our fleet today is made up of S19 XPs, which is the most energy efficient miner in production and widely available today. So our average energy efficiency across our fleet is about 25 joules today, where the industry average is well over 30. And as we come into the halving, S9s definitely have to come offline, S17s have to come offline. S19s, pros potentially may have to start coming offline depending upon their source of energy, where they're, and the cost of their energy. So I think it wouldn't be strange if Bitcoin remains at these kind of sub 30K levels to see maybe 20-30% of global hash rate come off initially. If you look at the difference between 30K Bitcoin and 25K Bitcoin, if it's 30K, you saw miners still growing. Now that it's been operating at 25K, their upcoming difficulty adjustment is downwards. So what that tells me is there are miners that already are having to shut off. Now, imagine Bitcoin at 25K, where the cost to produce Bitcoin for the majority of miners is somewhere over 28, 30K. That's right. A situation where, hash rate is going to drop significantly. So we just want to be prepared for all contingencies, if you would. And we think that there are a lot of scenarios that could happen. I think a lot of stuff is going to happen in Q1 of next year that, may portend very fortuitously for the price of Bitcoin or not. There are a lot of these ETFs. The expiration on these applications is kind of, Q1 timeframe next year. There may be other things, and whether Bitcoin follows its historical pattern or not is yet to be seen. But I think global liquidity plays a major role in where the price of Bitcoin is going to be. And if recession fears pick up in this country and the Fed kind of pauses or even begins to decrease interest rates, then we'll see an increase in global liquidity, which will drive more interest in risk assets like Bitcoin. So TBD. We'll have to see kind of what next year looks like.
So I think that's a very fair comment. Obviously there's a massive amount of speculation, but you do see a scenario. One of the scenarios is things remain tight. We live in a world where maybe the global hash rate does reduce just based on the pressure. And you brought up an excellent point. Even the difference between $25,000 Bitcoin and $30,000 Bitcoin prior to the halving does seem to have, some ramifications. So certainly after the halving, it would be, if we're still floating at some lower numbers like that, then I feel like what you talked about, maybe that 20 or 30% pullback in global hash rate. So in that instance, I imagine, obviously you're not going to be turning machines off. So you may end up having a larger percentage of the global hash rate. But what that does lead me to is a quick question. You mentioned in your report that came out today that you swapped out some S19, I think some S19 Pros for some S19 XPs. So are those machines being retired or just moved elsewhere?
So we're constantly adjusting and evaluating new sites, new locations, new uses for machines. We've spoken before about our interest in LFG, so landfill natural gas. other areas and other opportunities where the cost of energy is a lot lower than in traditional hosting sites or sites where you build out your own hosting. So we can deprecate machines to those type of lower cost sites. And while we don't have a lot of capacity in that type of site or configuration, we can deprecate these machines to those types of applications. So, essentially the J pros that we have, we think are still going to be viable if the cost of energy is right. Specifically to King Mountain, which is a site in Texas, there's a lot of curtailment in Texas. We want to be able to optimize and maximize our ability to run there, and by lowering the energy efficiency, the energy required to generate a terahash of hash rate, by using XPs, we're able to effectively increase the hash rate of that site.
So that brings me to a point. You guys have some vertical integration that I want to talk about later that some other companies don't have. Conversely, you've taken, I think, what you used to call, I don't know if you're still using the terminology, more of an asset light approach where you're more focused on buying the actual Bitcoin mining machines versus the infrastructure. So as a result, I think your machines are hosted. How does that affect your energy cost? I know you've mentioned, for you, energy is really energy cost plus hosting cost is your direct costs. Do you have the ability, you mentioned curtailment. So I know a lot of that curtailment is forced in the summer months in Texas. And like you said, geographically, every area is going to have its time for curtailment. If you're further north, obviously that would be in the winter. If you're, in Texas, that's in the summer. So do you guys have the ability to manage or micromanage your machines in addition to the curtailment that's kind of required? Do you have the ability to shift gears on your power usage to kind of keep your power costs down by dialing things back at peak energy cost times? Or, is that or are you more in a fixed purchase, a fixed price scenario with the host?
So it varies by site. So, for example, in West Texas at the King Mountain site, that's a wind farm. We have a PPA on the wind energy, and then we're sourcing energy off the grid to complement that. That wind energy is at a very low price. So we're able to kind of move back and forth between those two as the dynamics of the site allow. One of the key reasons, though, that we wanted to be vertically integrated from a technology perspective is, Bitmain mining rigs don't offer the ability to underclock or overclock natively. You have to use custom firmware. And we wanted to have some other special capabilities built into these miners. And so that was one of the reasons we developed our own firmware. And as we continue to deploy our firmware across our sites where our miners are located, it'll give us the ability to, we can run the miners super efficiently by underclocking them at times, as opposed to having to curtail them when it's an energy price issue. When it's a forced curtailment, then you have to curtail, obviously, and we're going to curtail regardless in those situations. But by being able to underclock, it allows us to operate at times when other miners can't operate profitably. By being able to overclock, it lets us take advantage of times when pricing is extra low in the marketplace. So we have historically had this kind of asset light model, as you said, where we work with third-party hosts. The UAE site was a site we designed, developed, and built together with our partners there. So that's not a hosted site. That's really, fully vertically integrated, technology and site. It's, we designed the Immersion technology together with the Immersion vendor that's operating at that site. And, that site was kind of unique in that because of the aspects of how we designed it, the pilot site, it operated for over 100 days without an engineer having to go on site. So the ability to run miners hands off with very limited downtime is huge, because when you run air-cooled miners, you have a lot of downtime. You have a lot of dust getting in these machines. They need to be cleaned. They need to be serviced, et cetera. Fans break. In this type of immersion that we're operating in UAE, you don't have that downtime, so you can optimize your performance. Plus, because it's immersion, it allows you to a certain degree, overclock miners when the environment is right for that. And so that's something that as we continue to build out our capacity, you'll see less third-party hosted, more fully vertically integrated hosting. You'll see more variety of types of sites, large and small, and even micro sites potentially, especially in the LFG side of our business,
Right.
which will give us an opportunity to continually focus on lowering our cost of operations. You know, if we can operate miners with very few hands, then that takes a lot of the operating expense out of the hosting piece, and you're just focused on energy cost at that point. And especially if you can do that at scale, you know, building utility scale sites is very expensive. It starts getting more interesting, and there's more energy readily available in smaller scale sites. But the problem with smaller scale sites is that you need to have a lot of engineers to, you know, service machines. Well, if you no longer have to service machines because the sites can operate for longer periods of time, and you only maybe have somebody go by once a month and do routine maintenance, that's a game changer in how you build out sites.
So that answers a big question that I had on my list. Immersion cooling, I know there's been a lot of optimism around the future of immersion cooling, but it sounds like you guys at this point now have some real world experience, some data to draw on of, you know, actual performance. And the statistic you just gave me about, you know, being able to be that hands off, it feels like a game changer from, you know, an overhead standpoint. And like you said, being able to have microsites where, you know, you're not reliant on, you know, these gigantic 200, 400 megawatt facilities. So, you know, you can spread yourself thinner if they operate this well. So you're having a positive experience with immersion cooling, is that?
Oh yeah, I mean, we love it. We're very actively, you know, and this is single phase immersion currently. You know, we're very actively developing technology in the dual phase immersion technology area, which is a very different type of cooling to single phase immersion. Dual phase, you allow the liquid to actually boil. What that gives you is the ability to pack miners more densely in the immersion system, which means you can pack more mining, more hash rate into a smaller square footage, which means you can now do these microsites even more efficiently.
Are the machines that are coming out, obviously they keep getting bigger, you know, from an exahash standpoint, or really a terahash standpoint, they keep getting larger and larger. Are they physically getting larger, or is it being more, are they more efficient from a space standpoint in that regard as well, as, you know?
Yeah, it's a little different. Every vendor has a different spin on it. You know, Bitmain has been focused in the past on their hydro solutions, which is you're essentially pumping water through the miners, cooling fins to cool the hash cards, the hash boards, and the ASICs. Not a very efficient model. It uses a lot of water. There's a lot of piping that can, you know, leak, et cetera. And I think if you were to sort of, you know, do a poll amongst miners, you'd see that there are not a lot of miners using Bitmain's hydro solutions. MicroBT has done a different spin on hydro with their new M56++s, which is better because it's a closed loop system and there are only 2 hoses per miner versus lots more hoses like in the Bitmain solution. We personally believe that, you know, as you get to dual phase immersion, you can design the miner physically different. You know, the problem today is essentially miners are still shoeboxes, and you put them into immersion tanks, and there's a lot of wasted space in those tanks. One of the reasons we invested in Authorize was we wanted to have miners designed to our specs. And so I think what you'll find over time in the future is that different vendors will have different configurations of miners. You know, our goal is to have the densest potential amount of compute possible in the smallest amount of space, so that it can be very efficient. And you get a lot of density, which means you don't need a lot of land, you don't need a lot of square footage, and you can put these things right next to power sources that are fairly small in nature, if you would. And so we believe, you know, a lot of instrumentation, a lot of capabilities for redundancy, a lot of remote operations, and then the ability to fine tune the operations of these miners. Some of the technology that Authorize has developed is really groundbreaking from a total cost of ownership perspective. And we believe that that will be a huge differentiator longer term in this industry, because if you can essentially tune your miners based on a price of Bitcoin, a cost of electricity, and a global hash rate, so they can maximize profitability. Now you're talking about building AI into miners. That's a pretty unique solution that, again, reduces the need for hands-on on site. And if you can do that in a very dense way, you get some very interesting options.
So if you could talk a little bit more about Authrized, you've mentioned that a couple of times. You've invested in that. You're a part owner. The firmware, you also mentioned some proprietary firmware. So is that firmware only compatible with the Authrized machines that are coming online? Is that going to be able to go across your fleet? And when do you expect to have the Authrized machines, I guess, start to roll off the line for you guys and have some of those purchases happen?
So I'm not going to comment on when we're going to have the Authrized machines rolling into our fleet, because that hasn't been announced. So
Gotcha.
We'll have to keep that under the covers, so to say. Our proprietary firmware is actually designed for Bitmain and all the Bitmain miners. So that's why we're rolling that out across our fleet. The Authrized firmware is separate and apart, and that's specific to the Authrized miners and how those are managed. They've developed that technology themselves, and we'll obviously take advantage of it as we deploy those miners.
Okay, so more to follow at the appropriate time on that one.
Yeah.
I wanted to take a minute and just clear up a little bit of an issue that I know a lot of my subscribers were concerned about, and I think people have a little bit of a misunderstanding. So I'll tell you what I'm talking about. You guys recently had a vote to increase the number of authorized shares. In my opinion, a lot of people don't exactly understand what that means. I'm sure you got more of the talk than I did, but my comment section was full of that, and I tried to do my best to explain the difference and what that means. So I'm hoping to just give you a minute to explain to your investors and to the world what that was about, and kind of the difference for me, underscoring the difference between authorized shares and outstanding shares, and what your intentions are around all that.
Right. Great. Well, I appreciate the opportunity. So authorized shares are essentially, when you form a company, you typically, in your articles of incorporation, you determine how many shares is the company authorized to issue. It doesn't mean you're issuing them. It doesn't mean you're going out and selling them in the market. It doesn't mean you're raising capital with them. It simply sets a cap on how many shares the company will have. And then as the company continues to develop over years, you extend that number and increase that number, rather, to a higher number. Now, Marathon is incorporated in the state of Nevada. And in the state of Nevada, you have to have 50.1% of the shareholders have to approve any change or 50.1% of the outstanding shares have to approve any increase in the number of authorized shares. In other words, shares the company could potentially issue. The challenge is that a lot of Marathon's shareholders are retail shareholders who don't vote at annual meetings. And so we tried for multiple years to expand the number of authorized shares above the 200 million that we had authorized previously. And so we had to use a method using a super preferred type of share that allowed us to gather the necessary votes to do this. And we wanted to do it once because it's very expensive to do. It's very hard to go out and solicit proxies from shareholders. So we increased the number of authorized shares from 200 to 500 million. So we wouldn't have to go and do this again for many years. That way we have enough shares so that as opportunities arise and as the board determines that the company should use those shares to then raise capital for various growth initiatives or acquisitions or whatever it may be, we have the flexibility to do that. We didn't want to be in a situation where all of a sudden all these opportunities arise and our hands are tied because we don't have authorized shares available. So that impacts everything from M&A opportunities. It impacts opportunities to fund growth. It impacts opportunities for us to compensate employees. There are a lot of things that go into that mix, but we're not going to go out and spend 300 million shares overnight here by any means.
All right. I feel like it's more powerful coming from you than it is from me. So to go to that point, just me looking at your most recent quarterly report, you guys did very little dilution from my perspective in the previous quarter. And there's been no, since you authorized those, there's been no change that we can see in what's going on. So more of an ordinary course of business in my personal opinion. So, I don't want to put more words in your mouth, but I think that's
Yeah, I think if you look at it, there was a lot of dilution in 2022 because there was a point in time in 2022 when we had zero production. In the month of July, we were not mining a lot of Bitcoin because King Mountain hadn't turned on fully, and we had issues at the hardened site. So, we had to use equity there to fund operations. We're not in that position anymore. Today, we produce more Bitcoin than we need to sell to cover all our operating expenses. So the only thing we use equity for today is for growth initiatives. So if we're going to buy a lot of miners, which means we're going to deploy those miners, or if we're going to develop new sites and we need to buy equipment for those sites, that all generates and creates value for shareholders, just like us holding Bitcoin generates value for our shareholders. You can do the math and look at how our stock trades, vis-a-vis Bitcoin, and you can see that, interestingly, the beta in our stock relative to Bitcoin could potentially, some people, believe, is very much driven by the fact that we hold as much Bitcoin as we do. So we're kind of a proxy for Bitcoin in that regard.
Right. So for those of you who don't know, Marathon has the largest HODL on their balance sheet of the publicly traded Bitcoin miners. So over 13,000, I think you just reported today.
Yep.
Is that a number? And to whatever extent you can answer that. In general, is your HODL strategy to continue to add to that, maintain that, add to that, or is it just depend on what the future holds?
So I think the Bitcoin maxis out there would skewer me if I were to say that we believe it's better to hold our assets in fiat currency than in Bitcoin. And as a true believer in Bitcoin, we believe it's better to hold our liquid assets as much as possible in Bitcoin. But we also need to have the flexibility of having fiat currency available so that we can take advantage of opportunities that arise. So no different than how anybody manages their investment portfolio. You have a certain amount in cash, a certain amount in stock, a certain amount in bonds, maybe some gold and Bitcoin. We have a lot of our assets in Bitcoin and a little bit of cash that we have, so we can be opportunistic with that. But you should expect to continue to see us HODL and add to that HODL.
Okay, that makes sense. Yeah, and like we mentioned earlier, you guys do tend to keep $100 million of cash over the last couple of quarters anyway, it seems like, of liquidity for any of those potential opportunities as they arise. One of the things that you guys do differently is you have your own mining pool. So I believe you're the only, of the large Bitcoin mining publicly traded companies that has your own mining pool. Can you just talk a little bit about advantages, disadvantages? What's the thought process there? And that's earlier we alluded to the fact that you guys are vertically integrated in some ways that other Bitcoin miners are not.
So if you think about how third-party mining pools operate, they have to be able to manage all of the different types of miners, meaning the mining rigs that are connected to them. They have to deal with different quality of network connections, meaning latency, to connect those miners. And miners are constantly taking miners offline, adding new miners, shifting things. And so mining pools that service third parties have a difficult task, and they're not necessarily the most efficient at operating. And if you go back to the period when even Foundry Pool was a no-fee pool, you have to wonder, how does a pool operate without charging fees and run a business? They obviously must be making money somehow off of all that hash rate that comes in. And so we, if you think about, it's not economical for you to run your own pool unless you have a certain amount of capacity, which we believe is kind of, as you start getting up to 10 exahash, it starts making sense. Because now you have enough hash rate that, luck, as opposed to playing out over an annual period, is now playing out over a 30-day period, more or less. And so you get more consistency. Smaller miners need that consistent payout that traditional pools have, based on your contribution of hash rate. But because we have only two types of machines in our pool, we have J Pros and we have XPs, and the vast majority are XPs because we control all the network connections. We don't have any third parties connecting. We have a fully secure way of firewalling, if you would, our pool and our miners. It allows us to eke out efficiency gains. It's also how we task miners. If you think about what a pool's role is, it's the orchestration layer. It essentially orchestrates what miners are doing. And so by only worrying about our miners and by being able to really control the latency with the connections and the type of miner, and then when you run that capability with custom firmware where you've optimized the firmware to run against your proprietary pool, now you get these small incremental benefits that allow you to be slightly more efficient, slightly more productive than other miners based on the same hash rate. And that's what we're trying to do, because we believe that, in down markets, it's the most efficient miner. And efficiency is not just a question of energy cost. It's it's uptime. It's really how productive are your miners when they're running, and how productive is your pool. So all of those things roll in together. And that's why, we really focused on this vertical integration of technology. The other reason why we wanted to operate our own pool is we didn't want to be dependent or have a risk of a pool operator all of a sudden saying, guess what? Can't do redemptions right now for whatever reason, or having to depend on them to ensure the security of their pool. And so we are really focused on owning all of the core components to what we do, because we're now at a scale where it totally makes sense for us to do that. And it gives us those little incremental efficiencies. There's also the potential that other people would be interested in using some of our technology, whether it's our firmware, whether it's our immersion technology, whether it's our pool. And as you look at foreign miners, so miners mining offshore, there's always this risk of what happens if the pool that I'm sending my hash rate to, if all of a sudden it ends up on some form of OFAC list or perp list and gets blacklisted. What happens if the hosting provider I'm working with gets on some sort of list? And so internationally, as sovereigns are getting into the business of mining Bitcoin, for example, our partners in UAE are the sovereign. Right. It's very important for them to have real sovereignty over their mining operation, their pool, such that they're not dependent on third parties, because if they're holding their reserve assets for a government in Bitcoin, you can bet that they want to make sure that they can sell that Bitcoin if and when they need to. And if they're mining using third parties, or if they're in a third party pool, those Bitcoin reserves may all of a sudden be able to be blocked, because governments have weaponized the financial system. The US is an expert at it. And if you look at the central banks of a number of the developing countries in the world, especially the BRICS, who within a very short period of time will have a larger GDP than the G20 nations, which include the US and Europe, they are buying gold for their reserves. They are not buying US Treasury notes as they used to. And so, as these countries look at alternative assets, including Bitcoin as a way to hold their reserves, they are obviously very concerned about the US weaponizing things that would somehow prohibit them to access markets with the Bitcoin that they hold. So
for your pool, if you're doing business with a sovereign like the UAE, are they going to have access to your pool, or is Marathon's pool really just simply for Marathon's machines?
So Marathon's pool is simply for Marathon. Now, our pool technology can be licensed, and if they would want to operate their own pool, we're happy to license it. So again, we don't view our technology as a moat. We view our technology as enabling us to operate more efficiently. And if people want to buy our technology, people want to buy our firmware, people want to buy our pool software, they're more than happy to do it.
Well, and another, if I could just highlight a takeaway from what you just said, one of the keys to having your own pool, you guys have now scaled up to a point where luck really is a factor. I know that's hard for a lot of people to comprehend, that such a complex thing as Bitcoin, does have a luck factor involved. And that obviously reduces and reduces as you scale up. So like you said, you're at a size where you can do this. Most Bitcoin miners really, this would not be a viable option necessarily for them to have their own pool, until you had mentioned, I think 10 exahash. So, something along that scale or bigger. And obviously the bigger you are, the less luck, or the luck, it's the same amount of luck, just equals out, like you said, on a monthly basis versus having to wait longer periods of time. So
yeah, and when you do have good luck as the only operator of a pool, you get 100% of the benefit of that. You don't have to share it.
Right.
The opposite also applies too. When you have bad luck, you pay for it. But in having benchmarked our pool against other leading pools in the world, we believe that based on the results of all our tests, that we're better off running our own pool than being part of a third-party pool.
Well, and another thing, and you've kind of alluded to this, and I'm just going to, kind of say it for the benefit of our audience, I have often wondered, you really don't see the fee that pools charge. As I look at all the financial statements, that's not a disclosure, and I'm not even necessarily sure the Bitcoin miners themselves can fully, put a number on that, but there clearly must be some cost to being in somebody else's pool. So, that's a cost you guys don't incur.
Yeah, I mean, just think of it this way. I think Foundry Pool at large scale charges, 1%, 1.5%. So, just look at that. That's a fee we're not paying.
All right. Well, you've done a great job of, I think, hitting all the major points that I know, the questions that I get asked from my viewers and subscribers, and the questions that I had personally. Any other thoughts you want to leave us with? Anything else? Obviously, your report came out today, so, you guys gave us most of the news there, but any parting thoughts?
I think, an important thing is that, we're finally now starting to see this narrative around Bitcoin and energy use moving from being a negative to being viewed more and more as a positive. Energy companies, especially grid operators, who have Bitcoin miners who are complying with curtailment, are absolutely seeing the benefit of Bitcoin miners helping to balance the grid. And, we see this in Texas, we see it in North Dakota where we operate, and even in UAE where we operate. We're seeing very positive feedback from the grid operator there regarding the benefit to having this large load that can all of a sudden shed load in very short period of time and then come right back online. And it's in Texas gotten to the point where, utilities are looking at battery technology and saying, why do I want to invest in batteries if I can just partner with a Bitcoin miner and essentially achieve the same outcome? And so, I think we're starting to see that more and more people, view the positive aspects of Bitcoin mining relative to the energy grid. Certainly the KPMG report that came out, last month, articulated that. And I think we're going to continue to see that. And I think we're going to continue to see, the folks in Washington beginning to kind of understand that Bitcoin mining actually is a positive. Granted, Elizabeth Warren and her minions, who just hate anything to do with crypto because they want to control everybody's money, will never view that. But I think we're definitely starting to see some positive trends in that direction.
Well, as an alumni of the Big Four, I appreciated KPMG for putting that report out. I thought that was very impactful there. And I also want to thank you. I know you've been one of the larger voices in trying to explain the benefits of Bitcoin to the grid. And like you said, there's a lot of I'm going to call it, my words, misinformation out there, or lack of information out there. So I appreciate you taking a big role and being a big voice in trying to educate people on how that all actually positively impacts the grid.
Thank you. Appreciate that.
All right. Well, thank you, Fred. Thanks so much for coming on the channel. I appreciate it. I know our subscribers appreciate it. And hopefully, best of luck going forward, and hopefully we can talk to you again in the future.
Look forward to it. Thanks so much for having me on.
Okay. Thanks a lot.